Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be taking a look at another small cap Canadian stock operating in the renewable fuels, specifically renewable diesel space. Now we've talked on the channel before about a few of these companies. They've been very well received, so I wanted to introduce you to another one. The name of the company is Cielo Waste Solutions, or Celio Waste Solutions, and they've got a lot of cool things going for them that we're going to cover in this deep dive analysis video. Now before we get into it, please take a second to smash the like button, you guys. It helps both myself and the channel out in a huge way. If you're not already subscribed to the channel itself, McNallie Money, feel free to do so. And let me know in the comment section below if you've heard of this company before, if you're holding shares, and what you think about their growth prospects moving forward. Now without further ado, you guys, let's get into today's video. Okay guys, so that's right. Today we're going to be talking about Cielo Waste Solutions, ticker symbol CMC on the Toronto Venture Exchange. Now Celio closed out the session down 9 cents, or about 7.5% a share, leaving them at $1.30 Canadian share price. So based on that, they're sitting at a market cap of about $505 million. On a fully diluted basis, they're probably closer to $550, $600 million, but truly a small cap player in the renewable fuel, specifically diesel space. So very similar to Green Lane Renewables, which we talked about a couple of weeks ago. They're involved in the upgrading of waste, whether it's landfill, agricultural, railroad ties, telephone poles, whatever the case is, actually turning that into renewable diesel through their proprietary process and technology. So super excited to talk about this one. Now you can see back in the middle of July here, they hit a high of $1.56 on the 13th. And then $1.55 on the 16th. So we'll wait and see if that was a double top or not. We'll see how the share price reacts in the next couple of days and whether or not they bounce off this $1.25 support level that we saw back on July 8th. But I think this recent share price pullback may be a really attractive entry point if you're looking for exposure into this type of industry or space. Now Celio has a very aggressive roadmap ahead of them in terms of facility build out. They've got a dual pronged approach or strategy that we're going to cover in this video a little bit later on. And there are currently no other competitors in this space in the Canadian market. So for those reasons, I really like what I'm seeing with this company. Now if we pull out to a 1 year here, you guys, you can see that Celio was actually trading under 10 cents a share at the start of this year. So back in January, you're looking at 8.5 cents a share. So they've had a tremendous run over the last 7 months. However, that being said, I still think there's a lot of upside potential in this name because of the things we're going to cover in this video. So I wouldn't be scared off by this, but I'm definitely happy to see a little bit of a pullback so you're not buying at those all-time highs. But we're going to get into that in a little bit more detail as we move through the presentation here. Now in terms of the video format, I wanted to talk about what Celio Waste actually does, who they are first, because this is a very unique or niche industry that a lot of people aren't familiar with. We're then going to talk about some recent developments at their Aldersyde facility, along with a new facility planned in Edmonton. Then we're going to take a deep dive into the company itself, talk about my bullish thesis on Celio moving forward, and then wrap the video up by comparing renewable diesel with traditional diesel and looking at some of the top investment highlights in Celio Waste Solutions. So in terms of their mission statement, Celio Waste is really looking to lead the waste to fuels industry using environmentally friendly, economical, sustainable technology. Celio plans to build or construct a network of renewable diesel facilities which really harnessed alternate waste from feedstocks and landfills. Now what's unique with this industry is the federal government here in Canada has actually mandated a certain percentage of diesel actually comes from renewable sources. So we're going to look at that by province in a little bit more detail here in a second. But I think this is one of the main drivers for this company is they've got a captive audience and there's currently no other competitors in the Canadian market. Now this mandate or decision actually came back in 2010 when the Canadian federal government announced every liter of diesel produced in Canada requires at least 2% renewable content, and they're advocating for that to actually go up to 5% by 2020. Now that hasn't occurred, that didn't happen last year, but most provinces are already using a mix of between 2 to 5% in anticipation of this change or mandate moving forward. So holistically, in Canada, these mandates sum up to 653 million liters, and currently the Canadian diesel industry is importing 633 million liters of this renewable diesel from countries like Singapore, Brazil, and Finland. Now, similar to Green Lane Renewables, what's so great about this industry and company is not only are they meeting that demand for renewable diesel, but they're also helping to solve the world's garbage issue. So currently the world generates 2.2 billion tons of garbage each and every year, and that's expected to increase to 5.6 billion tons by 2025 as third world countries start to come online and consume similar to first and second world nations. So Cielo Waste Solutions is really able to harness feedstock waste, solid waste, wet organic or compost waste, all types of plastics, tires, paper, cardboard, sawdust, and wood byproducts. So Celio will be opening the doors to an untapped source of energy with profits forecasted that makes Celio a very attractive investment. And I think that's what a lot of people have really taken note of here, and that's why we've seen that share price jump up so dramatically in the last couple of months. Now, back in 2012, Celio actually purchased a 50 liter per hour demonstration facility and relocated it to Red Deer, Alberta, so very close to my hometown here of Calgary. And this was really meant to be a proof of concept and show the world that converting waste to renewable diesel was possible. Now, the company has since relocated this demonstration facility to their Aldersyde, Alberta location, and that facility is located just south of Okotoks, again here in Alberta, which is really the epicenter of livestock or ranching here in Alberta, which gives them an ample supply to waste feedstock or the input material to this conversion process. Now, the final line on this page talks about the Aldersyde facility now being in the final stage of converting multiple different waste feedstocks into high-grade renewable fuels, and that's exactly what we're going to talk about in the next article here. So this article actually came out on July 8th, and Celio is giving an update on their Aldersyde location along with their new Edmonton location. And without going into too much detail here, you guys, there's two main components at the Aldersyde facility that I wanted to mention. So number one, they've actually expanded production and they're targeting 24,000 liters per day. So they were actually able to come very close to this production target within a 24-hour period. They were able to obtain 23,598 liters. Now, over a 10-day period, they're currently sitting at 53,000 liters of diesel, so they are still below that targeted threshold. Now, a big part of this is actually the first point here, which is related to the desulfurization process. So really pulling sulfur out of this distillate to get within that 15 parts per million threshold, which is required by the federal government. So really two things going on in tandem at the Aldersyde facility. There's some engineering going on with new equipment focused on getting sulfur out of the product, and they're continuing to push towards that new production goal or target for the facility. Now, the third point here really talks about their Edmonton facility or Fort Saskatchewan facility. And if you scroll down a little bit, you can see that Celio is pleased to announce that they've actually started initial work on this new corporate facility located near Edmonton. The initial steps are underway, which include permitting, site design, and the initial engineering phase. So this is going to be really exciting. We're going to look at their dual-pronged approach later in the investment presentation, but this is a key milestone for Celio as they need to get more facilities online to really build out their production capacity. So as you guys know, I love to invest in companies that are trying to solve a problem, and Celio really feels like they have found an effective solution for one of the fastest growing problems in the world, which is garbage and garbage management. Now, we already mentioned the overall volume of waste or garbage being produced each year, but currently a third of it, or 33%, is actually being dumped or burned, which is really expediting the issues around global warming and greenhouse gas emissions. Now, Celio Waste really feels like their proprietary technology is a very cost-effective way to combat this problem, and they're actually one of the fastest growing ESG companies in North America. Now, we've talked about ESG on the channel before. It stands for environmental social governance, and it's really becoming a popular space, attracting a lot of investment dollars as Wall Street and retail investors alike are looking for companies that can deliver value and help the planet at the same time. So we've talked about a few of the points on here. Celio Waste is a waste solutions company producing green energy, which just so happens to be highly profitable. We're going to look at some of the cost comparisons to traditional diesel in a second here. They've got proprietary technology that's much faster and requires a lot less energy than some of the competitors in other countries around the world. They've got easy and inexpensive access to their waste or input materials, again, which include feedstock, garbage, things like railroad ties, used tires, telephone poles. If you think about the Alberta economy, there's a lot of industries that produce waste that can be used as an input for Celio. And then the other point I wanted to make on this slide is actually their planned expansion. So within the next 5 to 7 years here, you guys, they expect to have 40 locations. Some of these are going to be corporately owned. Some of them are going to be through joint ventureships, which we're going to talk about. And they're expecting to be able to divert nearly 4 million tons of waste, which creates the equivalent of 1.3 billion liters of renewable fuel. So this slide's got a number of different metrics on it. The one I really wanted to point your attention to here is actually this 98%. So this is currently the percentage of mandated renewable diesel that's imported from other companies, which additionally requires ships to transport, which burn low-grade and highly toxic bunker fuel. So if you think about it, the government's trying to implement these mandates to help curb global warming, but in doing so, they're actually requiring companies to import renewable diesel from other countries because right now Canada can't produce it on its own. And this is actually expediting the burning of fossil fuels like bunker fuel in order to get this stuff to Canada. So similar to a lot of other government initiatives, you guys, the intent was good, but the actual execution has a lot of unintended impacts or consequences that maybe weren't initially thought of. And Celio Waste really has a solution or answer to that problem. Now, I mentioned that Celio had a dual-pronged approach or growth strategy, so I wanted to take a couple of seconds to talk about that. So there's two components of this, obviously. First is the corporate growth. So we talked about the expansion at the Aldersyde facility, really trying to get that up to that production threshold. The second corporate facility is the one we mentioned, located near Edmonton, Alberta. Now again, the funding for the land, the engineering, the initial design is already underway, and then they're looking to add additional corporate facilities, and they've already been in contact or in discussion with a number of different industries and countries around the world. So they're assessing those different opportunities currently, and they'll look to continue to build out their corporate portfolio of properties or production facilities as they deem fit. So this is a quick look at the Aldersyde facility. Just for reference here, you guys, you can see fully custom built facility with state-of-the-art equipment and industry-leading technology. Now, the second prong of the dual-pronged approach is really the joint ventures. So how they've structured this, you guys, is the partners are actually responsible for 100% of the upfront or financing cost. Celio will receive a 7% consulting fee until the projects have actually recovered that initial investment. Celio will receive 30% of the revenue, and once the projects have actually recouped that initial investment for the partner, Celio will then receive 50.1% of the profits from each one of these joint venture locations or facilities. Now, they're already in discussion for up to 9 facilities located in Grand Prairie, Calgary, Medicine Hat, Lethbridge, Kamloops, Winnipeg, Toronto, Halifax, so all across Canada. And based on these 9 initial facilities, they expect numbers in the neighborhood of $31.5 million for their consulting fees, $75.6 million for that initial payback period, and $126 million per year once the facilities are up and running and the partners have recouped their initial investment. So this would really be the expected run rate once everything's said and done of $126 million per year. So again, given a market cap right now of $500 million to $600 million. Very attractive, and you can see why the company's share price has really started to take off exponentially when you consider these numbers and the fact that Celio doesn't have to put any of their own money in upfront to finance these joint venture projects. Now, in addition to their corporate and joint venture initiatives, Celio also has a modular manufacturing model. So similar in a way to what we saw with Delta 9 with their modular grow pods, Celio's actually come up with these modular plants that can produce up to 4,000 liters per hour or 32 million liters per year. Now these plants can be set up on site, so maybe at a landfill, recycling center, feedstock lot. However, the cost is about $50 million, so it is a fairly significant investment. Payback on this is expected to be about $28 million annually based on EBITDA. So it would take about 2 years for the location to pay for itself. And Aldersyde is really where they're testing or proving this concept out. Now, in terms of timelines, Celio is expecting to have 1 to 2 corporate facilities or locations built within the next 24 months. So that's going to be one of them for sure, the Edmonton location, and potentially a second. And in addition to that, they expect to have 1 to 2 of these joint venture facilities built in the next 2 years as well. Now, if this plan comes to fruition and they're able to hit these timelines, with the expected 5 to 7 facilities, which would be again a mix of corporate and joint venture up and running, they expect $350 million in annual revenue, with nearly $200 million coming in terms of profits. So again, big numbers here, you guys, especially considering the size of this company at current state. Now, the actual process is pretty well guarded for Celio because this is a proprietary technology. They don't have any competitors, so they really are quite tight-lipped about how the process actually works. But there's a couple of points in here that I wanted to bring out. So the process itself is actually referred to as thermal catalytic depolymerization, or TCD for short, and they actually inject a catalyst into the waste materials and it's liquefied in their reactors. So the process uses atmospheric pressure and low heat, which results in much lower capex or energy costs compared to some of their competitors around the world. The process itself, or the conversion, is extremely quick, much faster again than traditional biodiesel processing, and those two factors overall ultimately lead to lower costs. Now, they've got their patent approved in the US and Canada for this technology, and the actual catalyst formulation is looked at or treated as a trade secret, so very similar to the Coca-Cola recipe, and that will never be patented, and companies will not have access to that technology at any point in time. So now that we've talked about what Celio Waste does, how they're really solving some of these garbage or waste related problems, their dual-pronged growth strategy, I wanted to start to wrap this up and look at some of the investment highlights or opportunities with Celio Waste. So number one is actually the demand for biodiesel in Canada. Now, we discussed back in 2010, the government mandated at least 2% of diesel must be from renewable sources. And you can see some provinces have already increased up to 4%. So BC really leading the way. Obviously, BC is one of the more green or environmentally conscious provinces here in Canada, but the federal mandate is for 2%, and the total average right now in Canada is 3.8%. Now, the numbers I wanted to really look at here, you guys, are actually the biofuel requirements over the next couple of years. So in 2020, the requirement was 664 million liters per year. That increased 31% now moving into 2021. So we're up to 872 million liters per year, and that's expected to increase again 26% moving into 2022 to just under 1.1 billion liters per year of renewable or biodiesel in Canada alone. So the demand side growth rate is incredible for this stuff, you guys. And again, they have no competitors, and they're only operating in Canada at this point in time when they really have a worldwide market or opportunity for their product. Now, at the start of the video, I promised we'd look at some of the cost comparisons. So this chart really shows traditional biodiesel compared to Celio's renewable diesel solution. So the numbers that really stood out for me here were the traditional biodiesel costs, which average about $1.40, compared to Celio's renewable diesel, which is coming in between 56 to 61 cents. So they're able to produce this stuff for about 40% of what traditional biodiesel or competitor companies are able to do. The price for biodiesel in Alberta is also a little bit higher than average, coming in at $1.67 per liter compared to $1.25 in terms of what other companies traditionally sell this product for. So if you look at the gross margin here, traditionally companies are underwater 12% on biodiesel, whereas Celio's actually looking at a 63.4% positive gross margin. Now, this is based on singular modular plants producing that 4,000 liters per hour. So obviously they're going to see economies of scale if you're looking at large scale production facilities, which are going to bring those costs down even further. And that's really why I'm so excited about this company, you guys. They've got a huge addressable market. They've got no competition here in Canada. They're backed by federal government mandates, and they're able to bring their product to market at a much lower rate than other biodiesel companies around the world. And that segues perfect into our last slide here, which really talks about the investment highlights in Celio Waste. So they've got exclusive license and patents, which we've talked about in both Canada and the US. It's a sustainable business that's really focused on creating a cleaner energy source for the world. They've got no Canadian competition, which is a massive selling point for me. They've already achieved their first sale. They've got commercial facilities up and running. They've proved the concept and technology actually work. They've got near unlimited availability to low cost, or in some cases negative cost, input materials. So in some situations, companies are actually paying Celio to dispose of waste for them. They've got multiple MOUs, which stands for Memorandum of Understanding. So essentially, it's a type of agreement or long-term supply agreement in this situation with CP Rail, for example, is one of them, to get rid of scrap railroad ties. And what that does is really secure their input material for the foreseeable future, taking one of the risk elements out of the equation. They've got signed offtake agreements. And then the final point here is really around that government mandated demand for renewable or biodiesel, which I think is crucial for this company's success. And I think a lot of other countries around the world are really going to follow suit here as we continue to see the effects of greenhouse gas emissions and global warming. So for those reasons, you guys, I think Cielo Waste is definitely worth a closer look, especially if you're trying to get some exposure into the more green or renewable space. It's still a relatively small company, and even though they've seen that massive share price appreciation since the start of the year, I think this recent pullback may be a great opportunity to start building out a position in this company. Now, personally, I'm looking to do exactly that. I'll keep you guys posted if and when I do start buying some shares of CMC. Let me know in the comment section below what you think of Cielo Waste, if you're currently holding any shares, or if there's any other companies in this space that you'd like me to take a closer look at on the channel. As always, please ensure you smash the like button. If you're not already subscribed to the channel itself, McNallie Money, feel free to do so. And thanks so much for watching, you guys. Have a great rest of your day.